Welcome to a Milk Market Tidbit for the May class and component numbers that the USDA released on Wednesday. This is Dr. Lawrence Jones, and I'm recording this on Friday morning, June the 7th. As usual, we get the Class 1 price a bit earlier than everything else, but this month it's going to be $18.46 for the base, and of course, each of the federal orders adds either $2 to $5 to that, but that's down 72 cents. So overall, the fluid price is going to be down just about 3/4 of a dollar. Class 3 is the one that really rallied. We came up $3.05 to 18.55. That's about where we were, last August, somewhere in there. Right now, the futures are trending up. These are the futures as of last night. But I do think these have just a little bit of a downward pressure built into them. And we look at how that May contract came in. That was a 5-week month. So we had one more National Dairy Sales report. The green is how the trade was evaluating it over time. So they actually overestimated it by about 10 cents at the very end. Now, one of the things that made this very difficult to evaluate was the volume of blocks. That was way down. Normally we're about 12 million a week, and the volume of barrels was down at least 2 of the 5 weeks. Why that's important is you got to remember that everything is weighted by volume. And so the total number is going to end up with a much higher weighting of barrels than blocks. And that's always an interesting discussion because one of the proposals in the federal milk marketing changes is to get barrels out of the pricing strategy. And that would have been bad this month. So we look at how this contract kind of changed over time. We were trading 1850s in here. We dropped all the way down to, 1575 or something just before bird flu hit. And what I always like to look at is how did this change over a 6-month period? And so in fact, if you would have sold these contracts 6 months ago, you would have lost 52 cents. But I'm going to continue to argue that if you would have bought DRP back here somewhere, you probably would have paid 30 to 40 to even 50 cents for that DRP. So losing that 50 cents on buying those contracts is about the same as the DRP cost. Now, using that metric, we can look at how the different contracts changed 6 months out. And so we are actually positive here. We were positive clear back almost 2 years ago. And so using this metric, we can actually say we've been in a bear market for just about 2 years, and we may have broken it. We'll have to see how long this stays above this zero line out here. But right now, it would look like we're in a bit of a bull market as opposed to a bear market based on this metric alone. Fat prices came up 13 cents to $3.46 a pound. That's still off of the high of 371. These are trending up a little bit, but again, I think butter's got a little bit of pressure on it. Protein made a nice rebound. I mean, it was just in the toilet down here last month to $1.73. We always hope to get protein prices up closer to $3, but we're not going to do that. We're going to be lucky to keep them at $2. The cheese prices are looking like it's going to be up a little bit, but again, this probably got a little bit of pressure on it. Other solids is one we have to kind of keep our eye on. It dropped 2 cents to 22 cents. This looks like it's trending up. And if whey continues to move up a little bit, this could be a little bit of a sleeper because it adds about 5 cents for every cent that it changes. So if we add 10 cents to the other solids price, we could easily be adding, 50 cents to the overall class 3 prices. Class 4 came up just a little bit to 2050. That's off of the high of 2149. This is, clearly headed up. As we said before, butter probably has a little bit of pressure on it, and non-fat dry milk right now seems to be moving up just a little bit on the global dairy trade. So we look out to see how Class 3 and Class 4 are going to compare. Class 4 is going to be higher, all the way through middle of next year. So this means a significant amount of depooling of Class 4 and the federal orders that can do it. And of course, it's big enough difference that the higher of is going to be better for the Class 1 price as opposed to the average plus 74. With the May numbers, we can look at the 50-50 blend out for the rest of the year. We've been saying between $1 and $1.50 right now. It's $1.65 over last year. Again, I'm going to stick with about $1.50. So we're looking at 1972 as an average for 2024 versus 1807. But we are quite a bit higher than 2021. All right, that's it for me.